What's up, everybody? Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it, and I'm back, baby. I told you guys things were going to slow down a little bit. For those of you who've been watching the channel for a while, you guys know, things have just kind of been rough for me personally lately, so just trying to make do with what I got. So it's just been a bit of a struggle, but we're getting back into it. I appreciate your guys' support. For those of you who have remained loyal to the channel, I told you guys that I wasn't going away, just taking a little bit of a step back. And so I'm going to start working my way back into things. Looking at the markets right now, S&P is flat on the day. The Dow's down. Well, it's flat too. Everything's flat. The Nasdaq's up around 0.5%. Thanks to Nvidia, which we will talk about later on this afternoon. Crude oil sitting down at $69 a share. Pause. And Bitcoin sitting at 27,836. It looks like not much has changed since I went live last, which is about 2 weeks ago. Look, there was a lot that I've had to go through. I went through the celebration of life for Fat Man Zoom, which was, really tough, but we're past that. I also have taken on some other forms of income in regards to social media management, which, by the way, if you guys are watching and you are a small business and you don't have a social media presence, or I don't know, you just never really even thought about it, you're going to need it. So make sure that you either get it or you can reach out to your boy and I can help you as well. Just a small little plug, but that's what I've been up to on the other side of the business. So what's going on here? A little bit of, the same. I'm just going to continue to cover earnings the best that I can with the time that I have, and continue to just hang out with you guys. There's nothing more that I love than to connect with you guys, on this channel. It's actually one of my favorite things. Actually is pretty much my favorite thing, is to be able to go live all the time and hang out with y'all and talk about stocks, make some money, and make an impact. So hopefully we'll bring some more people back. I'm not expecting some huge, big, viewership right out of the gate. So I'm keeping my expectations low. I hope that you guys do as well, because it's still going to be a bit of a, I don't know if you want to call it learning curve, but because I don't need to learn a whole lot, but just getting back into the swing of things, shaking the rust off, checking out some of the comments. I appreciate the love, guys. The 1D Lee hanging out. What's up, Anton Sigursky, longtime supporter, 30 months in the channel membership. Thanks so much for that. Really appreciate it. Shane Haley, what's going on, my man? Shane says, I pulled the trigger on PayPal. Looks to be carving out a nice bottom on the chart, but if I'm wrong, my bottom will be carved out. Bought a decent amount. How did the interview go? I'm trying to figure out which interview you're talking about, Snookeroo, but Dead Leak says, good to see you back. Good to be back, my man. AVGO, Broadcom does have earnings later on this week. We're reacting to that as well. I believe on Thursdays when Broadcom has their earnings. Ninu, good to see you. Thank you. Appreciate it. And today we got HP, which is ticker symbol HPQ, and then there's the HP or Hewlett Packard Enterprises, like the data side of their business that spun off. So we have HPE and HPQ, both reporting earnings today, and then there's also Box Inc. that's going to be reporting today too. So we're going to be covering those, but really I just kind of wanted to hang out, see what you guys are up to, how we're doing, and you want to throw some stocks out there. Look, I think the big one that a lot of people have been asking me about is Nvidia. And we can talk about Nvidia in just a second, but just kind of wanted to, if you guys want to toss some stocks out there that you'd like me to take a look at, I'd certainly be happy to do so as we're waiting for some people to roll in here. But listen, let's take a look at the Nvidia chart real quick. Look at this. Here's your 4-hour chart on Nvidia. It's been absolutely insane. Lots of people have been coming out and asking me, is this overbought? Is it too late to get into Nvidia? And I thought it was too late to get in Nvidia in the 280s. Okay. So what do I know? But what I will say is that it's trading at 50 times next year's earnings. It's up 124% over the last year. Year to date, it's actually up 180%. So since January, over the last 6 months, it is really over the last 5 months, it's up 180%. Now, why is this? How does this even come to be? Well, obviously the AI, hype has really been pushing Nvidia, so much so that Nvidia has forecasted the current quarter that we're in to be 50% higher than anybody else was expecting it to be on the street. So earnings came in last week. Expectations for the current quarter were to be around $7 to $7.5 billion. Then Nvidia comes in and says, hey, guess what? AI is so crazy right now. We're expecting $11 billion in revenue this quarter alone. And they upped their guidance for the rest of the year, which sent the stock soaring. Today, it hit $1 trillion in market cap. And I want to shout out not only myself, but Fat Man Zoom. This is about 2 years ago. We kind of cited the next $1 trillion stock, and Nvidia was like his big one that he thought was going to see $1 trillion in the $1 trillion club. And sure enough, it did it today. So, Christian, I know you're watching. So props to you, my man, on giving Nvidia the love for the next $1 trillion stock. It actually officially hit that today, and we'll see if it closes above the $1 trillion mark. But man, what an unbelievable move! And so, is it too late to get into Nvidia? Here's what I will say: Nvidia, in my opinion, is never too late to buy. It's always been just like something like an Apple, right? You just dollar cost average into this thing because it's never going away and it's only going to continue to grow. Is it overbought right now? I think in the near term, yes. I think it's gotten a little bit crazy. It wouldn't surprise me to see some sort of pullback at some point. But I feel like I've been saying that. I mean, this is ludicrous to see it up 180%, but is it justified? Maybe. I mean, I don't think that AI is going anywhere. I don't think we're in a bubble yet. I think we're getting there, but I don't think we're in a bubble at all. AI is just getting started. We're very much in the beginning stages of adoption across artificial intelligence. I mean, just a small sample size of ChatGPT, for example. People are still trying to figure out ChatGPT. I use it on a daily basis now, especially for my social media posts and anytime I want to prepare an email or a newsletter, what have you. The first thing I do is I gather all my information and spit it out to ChatGPT and say, hey, help me out here. And it is an incredible tool to use for that. That is just the tip of the iceberg, a tiny example of how powerful something like ChatGPT is. And then you apply it to all kinds of other facets and industries, and then you can just only imagine the potential that it has. And that's just with ChatGPT. That doesn't include anything else related to artificial intelligence when it comes to video production, creativity, that sort of thing, small tasks that you need done that you maybe paid somebody else to do, but now artificial intelligence can do it for you. Obviously, lots of controversies and a whole other conversation we can have with that. But this is just to say that artificial intelligence is here to stay, and it's only just getting started. So I don't think that we are in a bubble yet. Is there a lot of hype around it? Yes. Is it warranted? Yes. Can Nvidia go higher? 100% it can go higher. So I certainly wouldn't be short on Nvidia. I would be hesitant to just go all in on Nvidia, but I think that it makes sense to just to continue to dollar cost average into this. And there's plenty of other opportunities other than Nvidia as well. We have C3 AI that has earnings tomorrow after hours, going to be reacting to that too. That's ticker symbol AI. And you have SoundHound as well. There's plenty of artificial intelligence plays out there that Nvidia doesn't have to be your only one. So I think that I'm going to create a video on the other opportunities that you might have if you feel like you missed out on video, you don't want to get into it because it's just gone crazy. I'm going to create a video on AI stocks that are worth taking a look at that still have plenty of opportunity to them. So would love to get your guys' thoughts on that. So let me know in the comments below. Give this video a like, of course, and we're going to continue that AI conversation. But at the end of the day, Nvidia is still king. It's still going to do well. It's still going to go up in the long term. It's not going anywhere anytime soon. So appreciate the comments, guys. Good to have you back, Lindo. Appreciate that, man. Michael, ODFL. Yeah, it's Old Dominion. We can check that out. Sure. Let's go ahead and take a look at Old Dominion here as we get into starting to get into the close on the markets. ODFL is Old Dominion, transport industry. This one not doing half bad today. It's up around 0.5%. Let's take a look at the weekly chart. And I mean, the chart still looks amazing. This stock is a great company. It's a great stock. It's always overvalued, though, from a fundamental standpoint, and I just keep wondering when it's going to actually catch up with itself. You look at Old Dominion and their forward PE, it's sitting at 28 times next year's earnings, and this is a freight company. You know, it's Old Dominion Freight Line, ticker symbol ODFL. I don't know. I don't know what to tell you here. The growth doesn't justify a 30x PE ratio, and even the profitability is okay. It's at 40%. I just don't know if I can justify buying it up here at 30 times, given that the growth there doesn't really make a whole lot of sense. So if I were an analyst, I would say that this would be something that I would hold, not necessarily something that I would buy or say that it's overweight or something like that. I think it would be more or less that this is more of a hold just to kind of see what it does. I can't justify selling it either if you've had it for a while. So I would just say that it's just okay. Not that it's something that I would go bonkers on. But great company. Always doing the right thing. And really, the industry itself, there's just plenty of other opportunities over an Old Dominion. XPO would be one of them. It's nice and cheap. It's actually made some pretty decent moves over the last couple of weeks. Really since April, beginning of April, it's actually made some pretty strong moves. And it's actually sitting up here on a resistance at around $48. XPO, just to give you an example, same industry, but it's much cheaper. XPO is sitting at 20 times next year's earnings, which is far lower than where we're at with Old Dominion. That stock is up 50% year to date. I think it's got a lot more room to run. 52-week range here was at 49. So we're getting up to that 52-week high, and I think that it has the potential to continue to move above that. By the way, let me know in the comments what you guys think about the overall market. Now, I had said beginning of the year that I expected the stock market to be up anywhere between 15 and 20% at the beginning of the year. And that was just based off of historical events, things that I had seen before, and things that I have studied over history, specifically going back into the 70s where we saw interest rate hikes go crazy and how the market reacted to that, and then what happened following that. And, of course, fears of recession. All of that, I see no recession happening this year. I see the Fed potentially pausing. I see AI carrying the stock market much higher than potentially anticipated. So I would not be surprised now if we saw a greater than 20% move in the overall stock market. You take a look at the SPY now, and we're ready to go into June, right? Year to date, S&P 500 is already up 10.25%. So if the AI train continues to move stocks forward, then I think that the S&P could also move forward and move up. I don't see how we enter in some sort of recession this year. I don't see it. Unless the Fed is just completely oblivious to what's going on, which, hey, listen, could happen, right? But that's kind of where I'm at with it. All right, so the overall markets, and anyway, let me know what you guys think about that as well. Thoughts on Penn? Penn National has not been doing well. I still like it. It's just not a great stock right now. Here's your weekly chart on Penn National. All it does is just go down. I don't get it. I really don't. And I don't understand it at all. I don't understand why Penn National is acting the way that it is. I mean, compared to all of its other counterparts, and it's actually doing extremely well. Forward PE on this is at 6 times. All I can say is that it's stupid cheap. And short interest is actually kind of high. It's at 11% for something like this. Growth is still very much there. Profitability is ridiculous at 50% year-over-year gross profit margin. EBITDA is at 24. What more do you want? I don't know. I don't know what people or what analysts or Wall Street's expecting. What hedge funds want out of this? I mean, compare this to something like DraftKings, right? DraftKings, first of all, is not profitable at all, has no idea when they'll be profitable. Growth is pretty significant. Revenue growth is at 85%. That's actually ridiculous. But considering the fact that they're growing like this and still are losing money faster than they're making it is just mind-blowing to me. And the valuation is ridiculous. Almost $11 billion in market cap, and they're bringing in not even $1 billion a quarter. They're bringing in less than half that per year. Less than half their market cap per year. I don't understand. And then you look at the stock and how it's performing. It's just something that I can't explain. I really can't. Stock's doing incredibly well. And you can make arguments for why it's doing well, and it all points back to growth, and that's fine. But Penn's growing too. And they're growing and they're profitable. So I really don't know. I wish I had a better answer for you, but I still like it. I still think it's the better company out of a DraftKings or any of the other sports betting conglomerates. It's just that it's a great company, but it's a bad stock right now. And it has been, unfortunately. But at 6 times next year's earnings, are you kidding me? It does not deserve to be down here. Not at all. Best thing I could say is maybe it's dollar cost average and see how it shakes out. All right, let's check out. The market's officially closed. Let's check out HPQ. We'll go to the 5-minute chart so we can get some real-time action on this. It looks like that seems to be moving now. Stock closed down around 1%. It's up around 7, almost 0.75% right now. You can see the pretty decent move there on the 5-minute. There's your 5-minute chart right here. Let's see if I can pull up any news on HPQ. Now, HPQ is the computer company, computer side. HPE or Hewlett Packard Enterprise is the data side, the enterprise side of Hewlett Packard that spun off from HP. So HPQ is what you would expect, what you probably know, which is the computer side, computers, PCs, that side of the business. Let's take a look and see if there's any news on that just yet. It doesn't look like the earnings are out on that quite yet. I don't see... No, nothing on earnings just yet for HPE or HPQ. Anton says Penn is my pain. I think it's a lot of people's. Chris says DraftKings has greater market penetration, but just has been a dud stock for a while. Move off of it a while ago. DraftKings growth is good. They have greater market penetration. Pause. But I don't know. So does Uber, right? But they still can't make money. Like if we're gonna compare apples to apples when it comes to disruptive companies in their industries, Uber would be that one, right? Uber's been around for a better part of a decade. It might have been longer. Have they been around 10 years yet? They had to have been around for 10 years. And they still lose money. I just don't understand. At what point are we going to be like, okay, this thing's a dog, let's just keep pouring money into this thing and let them just spend like crazy and have no direction or idea when they're actually going to be profitable, I don't know. Daniel Camarena is live from the FedEx warehouse. Sold C3 AI and Palantir. Ooh, that's going to be interesting. I see Shane asking about Devon Energy, and I will address that as well later on once we get to some of these reactions. So stick around, Shane. What do I think about SoFi? Ask Z Writer. We'll take a look at that one as well. But I want to take a look and see what HPE is doing. That stock seems to be moving a little bit. that might actually have earnings. We'll see. Let me just confirm here. I saw that Daniel's selling C3 AI. C3 AI, they have earnings tomorrow, which might end up working out for you, but I think C3 AI is going to do extremely well, and we will see. If you guys didn't get my breakdown over at Stockwatch Sunday, then go check me out over at patreon.com/ownthechaos. The link is in the description. I actually recorded an entire video on the stocks that I'm watching this week, and C3 AI was one of them. And I feel like I gave a decent breakdown on that one. So if you guys want access to that, it's $5 a month. Just help support the channel, help me support my efforts here. But yeah, if you want to go check out my breakdown, it's over there on Patreon. We'd love to have you guys support me in that way. All right, so looks like HPE has their earnings out, and their expected earnings per share, by the way, was 48 cents, $7.3 billion in revenue. And the street was pretty split on this. 9 upward revisions to 6 down, according to Seeking Alpha. Their revenue came in at $7 billion, which is up 4% from the prior year. The expectation on that was 7.3, so a miss on revenue. Annualized revenue run rate was at 1.1 billion. That's up 35% from the prior year. GAAP margin of 36%, an all-time record for the company. That's pretty impressive. That's up 360 basis points from the prior year and up 200 basis points sequentially. Earnings per share, the expectation was 30 cents. They beat that at 32 cents. And non-GAAP was at 52. The expectation for non-GAAP was, I'm sorry. The GAAP estimate was 30 cents. The GAAP came in at 32. They still beat. Non-GAAP was 48 expectations, and the actual was 52. So they beat on earnings per share. Cash flow, pretty damn good. $889 million, an increase of $510 million from the prior year. Free cash flow, $288 million. That's up $500 million from last year. Capital returns to shareholders, $261 million in the form of dividends and share repurchases. HPE, pretty damn good earnings report. So a little bit of a miss on revenue, but the profitability actually knocked it out of the park. Looks as if the current quarter also is doing quite well. Intelligent Edge revenue was $1.3 billion, which is up 50% from the prior year in actual dollars and 56% in constant currency. High-performing computing and artificial intelligence, there you go, ladies and gentlemen, was up $840 million. That's up 18% compared to the prior year period. Probably why the stock's actually continuing to do well. Compute revenue was $2.8 billion, down 8% from the year prior, and in actual dollars and 3% constant currency. Storage revenue was $1 billion. That's down. Financial services revenue, $858 million, up 4%. The big thing, guys, again, and this is what I was talking about, before these earnings came out. But AI computing was up 18%. Intelligent Edge revenue was up 50%. So the AI train is still very much rolling. It's crazy to kind of see how things have been developing. So HPE now started to move down. I'm wondering if that has anything to do with the revenue miss, but they beat on earnings per share, and the move on this has actually been quite good. Not the move. The move has been good, but the report itself has been quite good. So we'll see if that actually turns around. Obviously, it's early yet on that. HPQ also is just remaining flat here. Let's see what we got on HPQ. Okay. Doesn't look like I'm seeing much on HPQ just yet. So that's just kind of been some earnings movement on HPQ. Doesn't look like those numbers have been released. We can take a look at Box and see. Looks like their numbers are out. And that stock is skyrocketing. It's up 8.25% right now, still moving up here. That is a boner candle if I've ever seen one. It's good to be back and actually see a good quality boner candle on earnings, guys. What do you think? Box came in at 2 cents. They beat by 5 cents on the expectations there, so they came in profitable. The expectation was that they were going to come in for a loss. Revenue came in at $251.9 million. They beat that expectation by $2.5 million, so pretty decent quarter for Box. Revenue, as I mentioned, Q4 fiscal guidance, Q2, sorry. A fiscal year guidance. Revenue is expected to be in the range of $260 to $262 million. That's up 7% year over year at the high end range, or 11% growth on a constant currency. GAAP operating margin is expected to be around 3%, and non-GAAP operating margin is expected to be approximately 24%. My goodness. GAAP net income per share attributable to common stockholders is expected to be around the range of 1 to 2 cents per share, and 5 cents from unfavorable exchange rates, which has been the theme for the last 2 years, it seems like. Non-GAAP diluted net income per share attributable to common stockholders is expected to be in the range of 34 to 35. Non-GAAP earnings per share guidance includes an expected negative impact of 5% from the exchange rate issue. Revenue is expected to be in the range of 1.045 to 1.055. That's up 6% year over year on the high end, or 10% growth on constant currency. This is a great quarter for Box. Great numbers here for Box. Checking in on some of the comments here. Demon Cooley asks if I'm trading earnings. I don't trade earnings unless I'm super confident in it, but I just like to cover them. I always try to stress that trading on earnings is more or less a crapshoot. You kind of just don't know. You can make a really good assumption that a stock's going to come in and beat earnings, and they might beat earnings, but there's something in that report that causes a huge sell-off. So you just never know. You just really never know. So if you're going to trade earnings, just go into it with the mindset that it's more or less a gamble. And if you just want to be a degenerate, knock yourself out. Nothing wrong with it. Just know what you're getting yourself into. Daniel Camarena says, I took my profit on both, but plan on getting back in perhaps if the opportunity arises. Certainly understand that. Thoughts on PayPal? I'll be covering PayPal in just a moment once we get through HPQ's earnings. Bought C3 AI at 21.53. Yeah, we're still just talking about AI, yeah, which I totally get. So sold not worth the risk when doubled. Yeah, I totally get that. Thanks, Nukaroo. Appreciate the kind words. Mixed Mist. I appreciate those kind words as well. So there you have it. There's Boxes doing pretty darn good off of, some ridiculous earnings. Those numbers were great. HPE, the enterprise side of things, cited some pretty good numbers on AI. The stock hasn't actually reacted in regards to that. In fact, it's only reacting to the miss on revenue, which missed by about $300 million. It's really not great, but everything else I thought was good. The AI side of their business is booming. HPE, obviously there's better AI opportunities out there, in my opinion, but also getting into that game. Speaking of AI, let's just take a look at C3 AI. It's up 33% today. Holy shit balls. Yeah, if you guys bought into C3 AI and you sold, I don't blame you. I wasn't keeping track of it. Last I looked at it today, it was up, but I didn't see that it was up 33%. God damn. That's crazy. C3 AI does have earnings tomorrow, which I will be live for. So make sure you guys are hitting that subscribe button, hit that notification bell. C3 AI is expected to come in at a loss of 17 cents, $71.34 million in revenue. How much you want to bet they come in with some monster effing numbers? If Nvidia is going to come in with those kind of numbers, imagine what C3 AI is going to do. C3 AI is up 300% year to date. And I'm here to tell you that I think that it's going to go higher than that. Even with this move. Demon Cooley has calls on HPQ. Still waiting to get those numbers on HPQ. Still just flat right now. Let's go back to the 5-minute chart. Take a look at that. Yeah, still no real movement on HPQ. I guess we'll get those numbers at some point. Let me just double check here. HPQ. Guys, it really makes me feel good that you're happy I'm back today. You know, I'm just kind of taking it easy, just getting back in the swing of things, but it's nice. Appreciate the kind words, appreciate the love, the support you guys always give me is amazing. Really appreciate it. I should be here all week for earnings. As I'd mentioned, C3 AI has earnings tomorrow. And tomorrow's earnings isn't just C3 AI. We got a couple other ones as well. Let me cover exactly who's reporting earnings tomorrow. So tomorrow, pre-market will be Advanced Auto Parts, Capri, China Data, and then C3 AI, obviously the big one. CrowdStrike, Salesforce, Okta, Chewy, Nordstrom are the big dogs tomorrow afternoon that I'll be reacting to, of course. And then Thursday after the close, I'll have Zscaler, Broadcom, Lululemon, ChargePoint, Dasana. Couple other ones, Five Below, Sentinel One, Dell, also going to be reporting. And then in the morning, there's Dollar General, Macy's, Billy, Hormel Foods, Duluth Trading. So some pretty decent names that are going to be reporting. And then it looks like HPQ is moving. So it looks like we finally got some movement on that. I saw somebody had calls on that. So far, so good. They're up a 1.5%. Let's see what HPQ is doing here. So their estimated earnings per share was at 76 cents, $13.04 billion. Their street was kind of split on this. And I was split myself. I wasn't quite sure where HPQ was going to go. But 76 cents per share was the expectation. $13 billion in revenue was also expected. It looks like they came in GAAP diluted net earnings per share of $1.07. And 53 cents was the expectation for GAAP earnings. Holy shit. Non-GAAP diluted earnings per share of 80 cents. The expectation was 76. So they beat on earnings per share. Second quarter net revenue of $12.9 billion. Expectation there was 13.04. So it looks like they missed on revenue, beat on earnings per share, if I'm reading that right. Second quarter net cash provided by operating activities of $0.6 billion, free cash flow of $500 million. Second quarter return of $300 million to shareholders in the form of dividends. 2023 second quarter net revenue of $12.9 billion. That's down 21.7%. They're quoted as saying, this is from the CEO, our disciplined execution and strong innovation in tough macro environment allowed us to deliver non-GAAP earnings per share at the high end of our target for Q2. We're well positioned for the win in our markets and drive long-term sustainable growth as we make continued progress against our future ready plan. Second quarter GAAP diluted earnings per share was $1.07. That's up from 94 cents in the prior year period and above the previously provided outlook of 40 to 50 cents. So they beat their own expectations, and now you can see the stock's turning red. It's not looking great. Starting to make that downturn. So mixed results on those earnings, but better than expected on earnings per share. Not so much on revenue. Michael says, I work for Old Dominion. That's why I keep asking about it. I've been here for 17 years and was buying shares at $12. Holy shit. Took a trade the other day at 278 shares at 302. I'm going to sell that soon. Yeah. It's just overvalued in my opinion. I think it is. But that's cool that you work for them. And maybe I knew that. You might have said something about that a while back. It's hard to keep it all track in this noggin of mine, you know? All right. So there you have it. So we have HPQ that comes in with some mixed earnings. They beat on earnings per share, but missed on revenue. Same thing for HPE. They beat on earnings per share, missed on revenue. It's starting to claw its way back, really kind of citing the growth on AI, which I think could present itself a decent opportunity for HPE. And then there was Box that kind of knocked it out of the park. It's still up 5%, gave back some of those initial gains. That was up 8.25 at one point. But we'll see where that lands. Pretty good guidance, good earnings per share, good revenue. There's lots to like about Box right now. Also citing artificial intelligence because why not? But this is your winner for the day. That is Box Inc. And the other two, not so much so far. Still early, obviously. We'll see what they have to say there in the conference calls and what have you. But Box seems to be the big winner here. And so let's go ahead and take a look at some of the companies that you guys were asking about. So I saw Shane asking about Devon Energy. I think Devon Energy and really energy in general is still worth hanging on to. Take a look at the weekly chart. It has not been a great 2023 for energy in general or energy stocks, but I think they're going to have a turnaround. I really do. There's still tons of demand out there, and I don't see production obviously going up. Or I'm sorry, I don't see production going up, which means that supply is going to stay restrained. So I think demand is going to continue to increase while supply remains the same, especially as the U.S. continues to try to replenish the SPR after, dumping it all last year to keep prices down, to try to keep prices down. So I think that Devon Energy is going to be fine. I don't know when you bought it or if you're planning on buying it, if you don't even own it. Obviously, I can't tell you what you should do in that regard. But if it were me, looking at this with a 4 PE at 7 times next year's earnings, it's still ridiculous. The profitability is insane on all of these energy stocks. And so if you look at Devon in particular, that's up 60% gross profit margin. Is at 60%. The EBITDA is also at like 57%. It's stupid. And that goes for like almost all energy companies. ExxonMobil, it's at 34%, 23% profitability. You look at Halliburton, for example, kind of the same thing, but not quite as good on profit. PXD, Pioneer Natural Resources, 54% gross profit margin. EBITDA is at 51%. It's just stupid. Marathon Oil, 80% gross profit margin, 70% EBITDA. And Marathon Oil is trading at 8.5 times next year's earnings. I mean, how unbelievable is that? Now, obviously, we can just shout at the market as much as we want. But if I'm just looking at the fundamentals here, these energy companies are making stupid money hand over fist. Absolutely stupid. You would think that they would just have to turn around at some point. That's just my 2 cents. So that's my thoughts on that. Somebody else was asking me about PayPal. So let's take a look at PayPal as well. PayPal is obviously been going through it. Still have no idea where the stock is going. Over the last 4 weeks, it's created new lows. We were well below pandemic levels here for PayPal. This one I truly don't understand. This is your weekly chart still on PayPal, and growth is at a modest 10% year over year for a company as old as PayPal. That ain't bad. Profitability is at 41%. This is trading at 12 times next year's earnings. PayPal is cheap AF. I think it just takes some patience and you'll be fine. It obviously depends on your timeline if you're looking to get into PayPal, but if you're looking for some quick money, I'm not quite sure. The sentiment on something like PayPal hasn't been great, but it is what it is. I think PayPal is an incredible value. It's nice and cheap at 12 times next year's earnings. So I think the risk reward here is quite good, in my opinion. SoFi also making some pretty decent moves over the last 3 weeks. And then, you got some ridiculous moves on. I don't even know what to say to this. It's been ridiculous. It's up 11.5% today. I've been bullish on SoFi for quite some time, despite the fact that the stock has been doing absolutely horrible. Year to date, it's up 34% and probably continues to do that. I think the debt ceiling issue certainly helped them out, which is why it was up pretty significantly today. That certainly helped them. I think there's a lot of other benefits here. The growth on SoFi is absolutely ridiculous. 51% year over year. Gross profit margins at 80%. So once they get to profitability, the stock's going to be ridiculous. And they're not far off. They're not far off at all. Earnings are expected to come in on July 31st. I think that there's a potential for them to surprise a lot of people. All right. Well, guys, I'm going to take it easy today since it's my first time back. I appreciate you all hanging with me this afternoon. I feel like this is a nice light re-entry into live streaming. It's been, 2 weeks now since I've done a live stream. And I told you guys, how things are going to be. But I'm going to be more active. I'm more active in our Discord now. And I'm going to start putting out free email stock alerts and all that stuff. So you're not going to miss any of that. Go check out the links that are in the description. Go check me out on Patreon for $5 a month. You can't beat the value that I'm giving you guys. Between Don and I, it's awesome. So go check that out and hit that like button on your way out the door. I certainly would appreciate it. Continue to show me support, guys. I'm not going anywhere. And I love every single one of you. I'll see y'all tomorrow at 3:45 p.m. Eastern time. Until then, stay safe and have a great evening. See y'all.